Alrighty guys, what is going on? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Tesla. Now, we all know Tesla over the past couple of weeks has seen some crazy sell-off. And we'll talk about it more here in a second. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. And guys, if you have any questions, concerns, make sure you guys ask them down below. So starting off, let's just break down Tesla. Now, for those of you that don't know what Tesla is the electric car manufacturer. They've been pretty much leading the electric auto space over the past couple of years. And with that, they've seen some extreme growth, right? If we actually look at this stock chart, you can see the stock was trading for about $30 to $40 for years. And you can see this thing just started moving up very, very fast. And with that, we've seen a lot of people say, hey man, this thing is overvalued. And the thing about Tesla is it just keeps pushing up and pushing up and pushing up and pushing up. And it's seen some crazy volatility, right? It hit 900, sold off back down to about $560, bounced up again. And then it just got more buying pressure, pushed up to about $1,200. Sold off back down to 900, pushed back up to 1100, and sold off. So over the past couple of weeks, we've seen a decent amount of sell-off where the stock went from that 1200 all the way down to as low as about $697. So right at that $700 mark. It got a ton of support. You know, anytime Tesla falls underneath, in my opinion, $1,000, it's an absolute for sale sign. So you can see right now, we've seen a decent amount of sell-off from Tesla stock. Now, a lot of people always like to say, well, Carter, Tesla's overvalued. I hate to break it to you. And I understand where they're coming from, but you have to understand a couple of things. One, when Amazon, when Apple, when Microsoft, when they were all trading, around the same price to earnings and all the same ratios, people during that time would say, oh, well, this thing's overvalued. Why would I buy it? Why would I spend the premium to purchase it? And I completely understand, them at the time, but now looking back at all of those stocks, you'd been almost foolish not to buy it. So I have a very similar thing with Tesla. I understand that they are having a couple of issues with supply chain, but for me, on the technical side, you guys can see we've seen this tendency to get a decent amount of support near and around this $900 mark. So it hit it once, twice, done. It pretty much did so much consolidating here. Sold off below it, used that old support as some resistance, sold off, and now we got to push above it. Plus, we have that trend line. I think we'll get a push back up to about $1,000 within the next, I would say, about 3 months. And I think Tesla over the next couple of years is only going to continue to grow. I think the electric sector is honestly just getting started. I think we'll see a ton of growth and we'll see a lot of volatility from other companies and even with Tesla. But we'll see companies like Rivian, Plug Power, all these higher speculation, higher growth stocks that are going to be high risk, high reward. We'll see a lot more volatility. But companies like Tesla that are leading that sector, that are more than just the electric auto space, that plan on getting into cell phones, which I guarantee will compete with Apple, who sells the second most phones in the world. Not to mention, they have Tesla Solar, which is getting into that renewable energy. And the thing about all that stuff is Tesla is just getting started. And I think within the next, 5, 10, 15 years, we're going to be looking back and wishing we would have picked up shares at $900. And the thing about it is, yes, right now we could see more sell-off. But you have to understand that short-term volatility is completely fine as long as we have that upward trend and Tesla is continuing to hit their numbers. Looking at their earnings, they've beat their EPS, they beat their revenue, and I think we will see a ton of growth from them in the next couple of years. So for me, answering that question of should you buy Tesla at $900, for me, it's an absolute for sale sign. I think a great strategy for people that don't have $900 to put up for shares, that's completely fine. I would dollar cost average it. Figure out a certain amount you want to invest, whether it's $1,000, whether it's $10,000, and just be consistent and invest once a week, once a month, and do it until you hit that premium. Me personally, I just continue to invest in it, and anytime Tesla falls about 10 to 15%, I double what I normally will put in. So during that time where it fell from 800 all the way to 500, I am doubling what I normally put in. So when this thing recovers, just like it's always done, we make a lot more money doing that because we move our average cost all the way down to these lows here, and then it pushes up. So for me, guys, dollar cost average it. You'll be all right. And it's an absolute for sale sign, but I don't go heavy into my growth stocks. I still keep Tesla at around 20% of my portfolio, 20 to 30. Sometimes if it's very undervalued, it'll hit 40% of my portfolio size. But yeah, I love Tesla. I don't see it going anywhere anytime soon. So that is it, guys. I hope you guys enjoyed the episode. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.